Okay, screen up and going. Alright, so this here is going to be highly controversial, and it's going to explain and show you why going to college is a ripoff, it's a scam, it's a business. You know, colleges are a business, and they make money off of you going to college and putting you into debt, right? And so, I mean, the average starting salary is $55,000 a year for a bachelor's degree. And suppose you get a bachelor's degree and they start you out at $55,000 a year, right? 4-year degree is, typically people are in $35,000 of debt. If you go to a private school, you're looking at, or you take a private loan out, you're looking at $47,000 in debt. So not only are you you're already 4 years behind, but you're also in debt $47,000 that you have to pay off. Okay. Now, suppose you just got a job right out of, you're 18 and you go and you work, a full-time job at like a trade. You could go work at a factory, you can work at the foundries, you can work at a warehouse, and you lower your cost of living low enough that you can put $200 a month into the stock market, right? So you could just come here and you can just pick your companies, right? We're not going to use Nvidia, we'll use AMD, we'll use Broadcom, right? And we'll use Nike. We're just going to pick just random companies to invest in, right? I'm going to pick Nike. We're going to pick Walmart, right? We're going to pick Google, right? We're going to pick Apple, okay? And we're going to pick a railroad company, right? Union Pacific. We're going to pick ADP because that's what pays people all the time. So, a lot of people, you can just, invest, or why not invest in that company, right? We could pick Microsoft, okay? And we're going to pick gold, right? And you don't need gold. This is, but a lot of people think you need it, so we'll pretend we need it. You're going to allocate everything 10%, right? So you're just buying, $200 or $20 a month of each one of these, right? In a brokerage account. And right, we're going to start, we're going to start back in the day, and we're going to go for 4 years, right? So you go and you're investing $200 a month, right? And your buddy went to college, right? So you're out there working, and by the time he graduates, right, you've got $30,000 already invested into the market, right? So your buddy, he graduates, he's got to go to college, or he graduates, and now he's got to, he gets a job, but your buddy, he's in debt, right? He's in debt for $35,000 that he's got to pay off, over, typically it takes like 20 years to start paying this stuff off, right? He's got to pay this off before he even, maybe he can start investing, but he's only making $55,000 a year, right? So he's got to, he's got to, get himself out in the world, right? Get a job and start paying off his debt, right? Well, let's say that he too can, pay off his debt. Maybe, he's paying this off, and he too can invest $200 a month, right? So now let's go and we're going to see what happens, 4 years later, right? So, 4 years later, where are you at, right? So your buddy's still paying off his debt, and you're sitting at $76,000. You see? So you're so far ahead of this guy, right? That even if he was to start investing, right? So suppose he could start investing, right? He could start investing the same as you, right? He starts in 2020 after he graduates. He's paying off his debt. He can invest $200 a month, same as you, right? Where would he be at? He picks the same portfolio as you, right? Well, he'd be at $23,000. So you're so far ahead of this guy already, and that's if they're even able to invest themselves. This is why this type of stuff needs to be taught, right? Is you're automatically building your own business, right? Your portfolio and your stocks is you're a business owner, right? And you're just managing these allocations on an equal weights, equal balances of 10% once a year, and you're just adding to it while you work, right?